Imagine a customer starting a banking relationship fully online and ending with an active account that's completely eIDAS compliant. In this module, we'll connect onboarding, identity proofing, qualified e-signatures, and evidence services into one clear, traceable architecture. You've already seen the foundations, the business context, and the detailed components for identity, signing, and evidence. Now we'll stitch those pieces into a single end-to-end blueprint that you can present, defend, and later evolve in future modules. Think of this journey as a storyline that starts the moment a customer says, "I'd like an account." They share just enough data for us to understand who they are and what they want. Behind the scenes, we verify identity, assess risk, and satisfy regulatory obligations. If everything checks out, we orchestrate a qualified electronic signature, capture evidence of every step, and only then create and activate the account. The onboarding journey begins the moment someone opens your web portal or mobile app. Before they even log in, they're choosing a product, answering basic eligibility questions, and giving consent to data processing. Behind the scenes, every request runs over TLS, while fraud controls look at device fingerprints and IP reputation. Once those checks pass, the channel creates a provisional user record and hands it to the onboarding services as a new case. Before we ask the customer to prove their identity, we first collect all the structured data we'll need: basic personal details, contact information, and any product-specific attributes like income. That dataset is immediately run through automated checks, sanctions and PEP screening, plus simple eligibility rules such as age or residency. Clear explanations, consent prompts, and progress indicators keep the experience transparent, while APIs route this data into risk and compliance engines. At this point, the user's identity is proven once, using an eIDAS-compatible method, and then trusted across the onboarding journey. This could be a national eID, a remote video identification, or automated document checks through a trusted provider. The identity proofing service and eIDAS connector return verified attributes, an assurance level, and a full audit trail. The orchestration layer consumes these outputs and decides whether to continue, trigger a fallback path, or abort onboarding. Once identity is confirmed, the bank moves to a different question. Given who this person is, should we do business with them, and on what terms? Identity data flows into multiple risk engines: AML and sanctions checks, fraud analytics, and sometimes credit scoring. Each system contributes to a combined risk view that drives the decision to approve, decline, or trigger enhanced due diligence. Every decision is fully logged and traceable back to the original identity proofing evidence. After approval, the system turns that decision into a legally binding contract. The product or core banking system generates the contract and embeds all required disclosures. That document is tightly bound to the verified identity, product identifiers, timestamps, and decision data. Using this package, the backend calls the qualified signature service, which creates the signing transaction and notifies the customer with a secure screen or link, often protected by OTP. During signing, the customer proves who they are using strong authentication, such as an eID, a mobile app, or a one-time password, and explicitly gives consent. Once that check passes, the signing orchestration calls the remote signing service. Inside that trusted platform, keys are protected in an HSM, the certificate authority issues or validates the qualified certificate, and the service applies the qualified electronic signature, binding it uniquely to that customer and document. When the customer signs, two things must happen. The bank must know the outcome, and the proof must stand up to scrutiny. The signing service sends a confirmation back to the orchestration layer with status and key metadata. In parallel, it captures strong evidence: the validation report, timestamps, certificate chain, and detailed transaction logs. All of that is written into a tamper-evident evidence repository, while the customer simply sees a clear confirmation and receives their signed document. With signing complete, everything the bank has collected is consolidated into the core system. A customer profile is created, the chosen products are set up, and all identity and contract evidence is linked to that record. Next, the bank issues or activates credentials, usernames, passwords, app registrations, or strong authentication devices. Finally, the customer receives welcome and regulatory notices, while initial limits and controls reflect their risk profile, with room for later adjustment or step-up checks. This architecture shows how a full digital onboarding journey is stitched together end-to-end. Customers start in the channel layer, which calls APIs in the integration layer. Those APIs invoke business services for onboarding, risk checks, and customer management. Whenever trust is needed, those services call out to specialized trust providers for identity proofing, remote signing, and evidence storage. Everything is ultimately anchored in core systems like banking, CRM, and document management, all protected by clear trust and network boundaries. Here we make explicit where trust stops and starts. Inside the bank, systems can communicate more freely, but the moment data leaves for an eIDAS node or a QTSP, it must cross a hardened boundary. Only the minimum necessary attributes, documents, or evidence go out, always under encryption, mutual TLS, and signed messages. Each of those trust lines is backed by contracts, SLAs, and regulation that define responsibility when something goes wrong. Traceability is what turns a nice architecture diagram into something an auditor, a product owner, and a risk officer can all rely on. Start from each business or regulatory requirement and ask, which risks does this create and which components handle them? For fraud and AML, that might be identity proofing, risk engines, and monitoring. For disputes and compliance, that's evidence storage, audit trails, and signature validation. Capture these links in a simple table and keep it updated as the design evolves. You've now seen the onboarding journey end-to-end, how each step connects, and where the trust boundaries sit. You've linked components back to requirements and risks as stakeholders expect. Next, we'll turn this blueprint into concrete architecture deliverables, and then learn how to extend it as regulations and channels evolve.